Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Muhammad Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first important Forex news, unemployment rate in Japan. The second one is French consumer spending in Europe. So these are the previous week important financial news events. Let's start with the first one. Unemployment rate in Japan. Now, what is unemployment rate in Japan? Unemployment rate measures the percentage of the total labor force in Japan that is unemployed but actively seeking employment during the reported month. It is an important indicator of labor market conditions and overall economic health. A lower than expected unemployment rate suggests stronger employment conditions and economic stability, which can support the Japanese yen and may push the USDJPY lower. A higher unemployment rate signals weakness in the labor market and slowing economic conditions, which can pressure the Japanese yen and lead to upside movement in USD yen forex pair. Now the event details. The previous reading was 2.7, forecast 2.7. The actual number we got is 2.5%. Let me discuss about market context and pre-release expectations. Japan's unemployment rate was expected to remain unchanged at 2.7%, matching the previous reading. This suggested stable market conditions and no major change in unemployment or employment trends. However, the actual result came in at 2.5% lower than both the forecast and previous reading. This was positive Forex financial news for the Japanese economy. It indicated stronger labor market conditions and improving employment stability. Under normal market conditions, stronger employment data would suggest the Japanese yen would support the Japanese yen and push the USDJPY lower. Now, let me show you the price chart of USDJPY currency pair. This is the chart of USD Yen currency pair. Now, this is where we got the news, and after the news announcement, USD Yen moved up overall. Now, why the price of USDJPY moved up? Well, despite the stronger than expected labor market data, the price of USDJPY currency pair moved up after the Forex news release. The price action showed that broader market forces had a greater impact than the positive Japanese employment data. This is a good example of how Forex news reactions do not always follow the financial economic data itself. Now, why USDJPY moved up? Even though the unemployment rate improved to 2.5%, USDJPY rallied due to several reasons. For example, stronger US dollar demand, US Treasury yield support, interest rate differentials favoring US dollar, market focus on US economic outlook, broader forex market sentiment supporting the dollar, external macro factors overweighing positive Japanese data. The key drivers observed, well, if we go back to the PowerPoint presentation, the unemployment rate beat expectation 2.5%. If you do the comparison, the forecast was 2.7, the previous reading was also 2.7. So the Japanese labor market conditions improved and Japanese yen received limited support from the data. US dollar strength dominated price action. Broader forex market sentiment favored USDJPY upside. Market reaction diverged from fundamental expectations. As far as the technical and sentiment considerations, USDJPY maintained bullish momentum after the forex news release, despite the positive Japanese data. This suggests buyers remain in control. USD demand observed positive JPY sentiment. Market participants focused more on US factors. Bullish sentiment remained intact after the news announcement. The reaction highlights how interest rate expectations and broader market sentiment can outweigh individual economic reports. So short-term bias is slightly bullish in USD/JPY currency pair. Continued US dollar strength could keep the pair supported in the near term. However, improving Japanese labor market conditions may provide some support for the yen over time. Forex traders should continue monitoring Bank of Japan expectations, US yields, and overall forex market sentiment. The overall analysis and key takeaway is the Japan's unemployment rate improved to 2.5%, beating both the forecast and previous reading. The result signaled stronger labor market conditions and was positive forex financial news for the Japanese economy. However, USDJPY moved higher after the release as US dollar strength and broader market sentiment outweigh the positive impact of the financial data. This demonstrates that currency movements are often driven by a combination of economic data, interest rate expectations, and overall market positioning. Final key takeaway is the previous reading was 2.7%, forecast is 2.7%, and the actual number we got is 2.5% unemployment rate in Japan. So the Japan's unemployment rate improved more than expected, signaling stronger labor market conditions despite the positive news. USDJPY moved higher as US dollar strength and broader market sentiment remained the dominant drivers of price action. The next one is the next one is the French consumer spending month over month report. and that news announcement came at 6:45 a.m. UTC time on May 29th. Now, what is French consumer spending (MOM) in Europe? French consumer spending month over month (MOM) means month over month. It measures the monthly change in the total value of consumer spending. In France, it is an important indicator of consumer demand and overall economic activity because household spending plays a major role in economic growth. A higher than expected reading signals stronger consumer confidence and economic strength, which can support the euro and may push the euro USD higher. A weaker reading suggests slowing consumer demand and weaker economic conditions, which can pressure the euro and lead to downside movement in euro USD currency pair. Now, the event details. We got the news announcement at 6:45 a.m. UTC time on May 29th. The previous reading was 0.9%, forecast minus 0.1%, and the actual number we got is minus 0.5%. The currency pair we're going to focus is the euro dollar currency pair. Now, let me talk about market context and pre release expectations. French consumer spending was expected to decline by minus 0.1% after the previous increase of 0.9%. The forecast already pointed to weaker household spending and softer economic activity. However, the actual result came in at minus 0.5%, which was worse than expected. This was negative Forex financial news for the French economy, and it indicated weaker consumer demand and slower economic momentum. Under normal market conditions, weaker spending data would pressure the euro and push the euro USD lower. Now, let me show you the price chart of euro dollar currency pair. Here is the price chart of euro USD. Despite the weaker than expected consumer spending data, the price of euro USD moved up after the Forex news release. The price action showed that broader market forces had a stronger impact than the negative economic data. This demonstrates that Forex news reactions do not always follow the fundamental data outcome. Now, why Euro USD moved up? Even though the consumer spending fell by minus 0.5, that's the number we got. The Euro USD rallied due to US dollar weakness during the session, improved market risk sentiment, reduced demand for safe haven United States dollar, forex market positioning ahead of other economic releases, profit taking on existing US dollar long positions, broader forex market sentiment favoring euro strength. The key drivers in the forex market observed is the consumer spending missed expectation. The expectation was minus 0.1%, and the actual number we got is minus 0.5%. So the French consumer demand weakened. Economic data was negative for the euro. US dollar weakness dominated price action. Euro USD gained despite weaker fundamentals. Market reaction diverged from economic expectations. The technical and sentiment considerations. If we take a look at a price chart, here's the weekly time frame of euro dollar currency pair. The euro USD showed overall bullish momentum, and after the news release we also got this kind of a bullish rally. This is where we got the news announcement, and then market rallied up in euro dollar currency pair. So this suggests buyers remained in control. US dollar selling pressure outweighed negative euro fundamentals. Market participants focused on broader sentiment factors. Bullish momentum remained intact after the news announcement. The reaction highlights how currency markets can prioritize global sentiment and dollar flows over individual economic reports. The trading outlook post release. Short term bias is obviously slightly bullish in Euro USD currency pair. Further upside may occur if US dollar weakness continues. However, weaker consumer spending could still limit stronger euro gains over the medium term. So, forex traders should monitor ECB expectations, eurozone economic data, and overall forex market sentiment. Volatility may remain elevated as forex market reassesses growth expectations. Overall analysis and key takeaway is the French consumer spending fell by 0.5%, missing expectations and signaling weaker household demand. The result was negative forex financial news for France and the broader eurozone outlook. Despite the weak data, Euro USD moved higher after the release as US dollar weakness and broader market sentiment outweigh the negative economic surprise. This shows that currency markets are often driven by multiple factors beyond a single economic report. The final key takeaway is the previous reading was 0.9%, forecast minus 0.1%, and the actual number we got is minus 0.5%. So, French consumer spending weakened more than expected, signaling softer economic activity. Despite the negative forex news, Euro USD still moved higher as US dollar weakness and broader market sentiment remained the dominant drivers of forex price action. Now, let us take a look at previous week global market trends. I'm going to talk about euro dollar and US dollar Swiss franc currency pair. First, let's take a look at euro dollar. The trend is up in weekly time frame of euro dollar currency pair. Inside the daily chart, it is kind of a sideways trend going on, and here's the support area right around here. So it's quite possible that market is going to move sideways and then drop lower over here. After that, we might get a bullish rally in Euro USD currency pair. So the way I see the price of euro dollar is most likely, going to drop and then rise up over here. Okay, this is what I see. In 4 hour time frame, this was the resistance. Market tried to close a candlestick, but we only got just one candlestick close, which is not enough. However, it's possible, let's say market tries to rise back up again and closes a bullish candlestick above 1.1662 price level. Then we might get further upside in Euro USD currency pair. Otherwise, it's just a sideways market. Sooner or later, euro dollar is going to falls back down. Next one is the US dollar Swiss franc. The trend is down overall in weekly time frame. Inside the daily time frame, it seems to me price wants to go sideways. This is where market rallied up. We got a nice rally. Then market dropped, then rallied back up again, then dropped, then rallied back up again. So it's quite possible that market wants to move sideways, and then we might get a breakout, a bullish breakout, most likely to the upside. Now, let me talk about current week's macroeconomic events and data releases. I will be covering the key developments in forex market with a focus on fundamental analysis. The first one is the German Final Services PMI related to Europe, and we're going to discuss the euro dollar currency pair. These are the upcoming news events. The second one is the unemployment rate in Canada. So let's start with the first one. German Final Services PMI. The date and time is June 3rd, 7:55 a.m. UTC time. Now, what is German Final Services PMI in Europe? German Final Services PMI measures business activity and economic conditions in Germany's services sector, including finance, transportation, communications, and hospitality. It is a key indicator of economic performance as the services sector represents a large part of Germany's economy. A reading above expectations suggests stronger business activity and growth supporting the euro and pushing the euro USD higher. A weaker than expected reading indicates slowing services activity and softer economic momentum, which can weigh on the euro and lead to downside movement in euro dollar currency pair. Now, the event details. The previous number was 47.8. The forecast is also 47.8. Actual data not yet released, but it is going to be released on June 3rd at 7:55 a.m. UTC time. Now, let me talk about market context and pre-release expectations. Germany's final services PMI is expected to remain unchanged at 47.8, matching the previous reading. A reading below 50 indicates contraction in the financial services sector. Therefore, the forecast suggests that business activity remains weak and economic growth remains under pressure. Forex markets will closely watch this Forex news release for signs of improvement or further deterioration in Germany's services sector. If the actual reading exceeds 47.8, it could signal improving business conditions and supports the euro. If the results fall below expectations, it may reinforce concerns about slowing economic activity and weigh on the euro. Now, why the euro USD could move? Well, there are key drivers for price action that includes actual PMI results versus forecast and previous reading, business activity trends in Germany, Eurozone economic outlook, European Central Bank ECB policy expectations, US dollar strength, and interest rate expectations. Overall, forex market sentiment. So, even small PMI surprises can create volatility because traders use these reports to assess future economic growth and monetary policy expectations. The technical and sentiment considerations. Euro USD may experience short term volatility during the Forex news release. So here's the price chart of euro dollar currency pair. So tomorrow we're going to get this report. As of today, euro USD is just going nowhere. It looks a bit sideways. Few pips up, few pips down. The euro USD may experience short-term volatility during the forex news release. A stronger than expected PMI reading could support the euro buying and push euro USD higher. A weaker than expected result could increase selling pressure on the euro and support the US dollar strength. However, broader US dollar momentum and ECB expectations may have a large influence on sustained price direction after the initial reaction. The short term bias is neutral. The upside potential for euro is there if the PMI beats the expectations, the 47.8 number, and we get higher number. The downside risk for euro dollar is also there if PMI misses the expectations and signals deeper contraction. So, forex traders should expect increased volatility around the news release time as the forex market reacts to fresh economic data. Follow through direction will likely depend on both the PMI outcome and the broader US dollar sentiment. Overall analysis is the Germany's final services PMI is expected to remain unchanged at 47.8, indicating that the services sector continues to operate in contraction territory. This Forex financial news release will provide important insight into the health of Germany's largest economic sector and may influence short term Euro USD movement. While the financial data is important, broader Eurozone economic growth expectations, ECB policy outlook, and US dollar strength will remain key drivers for the currency pair. The final key takeaway is the previous reading was 47.8, forecast 47.8. The actual data not yet released, but it is going to be released at 7:55 a.m. UTC time on June 3rd. Euro USD traders will closely monitor this forex news event for signs of improvement or weakness in Germany's services sector. A stronger reading could support the euro, while a weaker result may increase downside pressure on euro USD currency pair. The next one is the unemployment rate in Canada, and we will get the financial report on June 5th, 12:30 p.m. UTC time. Now, what is the unemployment rate in Canada? The unemployment rate measures the percentage of Canada's labor force that is unemployed but actively seeking work during the reported month. It is an important indicator of labor market conditions and overall economic health. A lower than expected unemployment rate suggests stronger employment conditions and economic stability, which can support the Canadian dollar and may push the USD-CAD lower. A higher unemployment rate signals weakness in the labor market and slowing economic conditions, which can pressure the Canadian dollar and lead to upside movement in USD CAD currency pair. Now, the event details. The previous reading 6.9%, forecast is also 6.9%, the actual data not yet released. Now, let me discuss market context and pre release expectations. Canada's unemployment rate is expected to remain unchanged at 6.9%, matching the previous reading. This suggests that labor market conditions are expected to remain stable, although unemployment remains relatively elevated compared to previous years. A steady, a steady reading would indicate that hiring activity and labor demand have not changed significantly during the reporting period. Forex traders will closely monitor this Forex news release for signs of improvement or deterioration in Canada's labor market. A reading below 6.9% would signal stronger employment conditions and could support the Canadian dollar. A reading above 6.9% would indicate weaker labor market conditions and could pressure the Canadian dollar. Now, if you take a look at a price chart of USD CAD currency pair, it looks like to me we got this nice trend over here. Now, why USD CAD could move? There are key drivers for price action that includes actual unemployment rate versus the forecast in the previous reading, strength of Canada's labor market, Bank of Canada's policy expectations, Canadian economic growth outlook, US dollar strength and interest rate expectations, and overall forex market sentiment. So, even small surprises in employment data can create volatility because labor market conditions influence monetary policy expectations and economic forecasts. Technical and sentiment considerations. USD CAD may experience increased volatility during the Forex news release time. A lower than expected unemployment rate would likely support the CAD strength and push the USD CAD down. A higher than expected unemployment rate could weaken the Canadian dollar and support the USD CAD to the upside. However, broader US dollar momentum, oil prices, and Bank of Canada expectations may influence the longer term direction after the initial market release. The short term bias is somewhat bullish. The downside potential for USD CAD is there if unemployment falls below 6.9%, and the upside potential for USD CAD if unemployment rises above 6.9%. Forex traders should expect elevated volatility around the release time as the forex market reacts to fresh labor market data. Follow through price action will likely depend on both the employment report and broader US dollar sentiment. Overall analysis is the Canada's unemployment rate is expected to remain steady at 6.9%, suggesting stable labor market conditions heading into the news release. The Forex financial news event is important because labor market performance plays a major role in economic growth and Bank of Canada policy expectations. While the employment data may drive short term USD CAD volatility, broader factors such as US dollar strength, oil prices, and interest rate expectations will remain important drivers of market direction. The final key takeaway is the previous reading 6.9%, forecast is 6.9%, and the actual data is not yet released. The USD CAD traders will closely watch this Forex news event for clues about the strength of Canada's labor market. A lower unemployment rate could support the Canadian dollar and pressure USD CAD lower, while a higher reading may strengthen the bullish case for USD CAD. Now, let us take a look at current week Forex market trends. I'm going to take a look at Euro dollar and Australian dollar currency pair first. Regarding the Euro USD, it's an uptrend. In daily, it looks a bit sideways. In 4 hour, it also looks somewhat sideways. The Australian dollar, AUD USD currency pair, the trend is bullish overall. We might get a short term pullback, or in other words, a retest of this bullish trend line. Sometimes a market tries to test the trend line, goes down a little bit, and then comes back up after that. Next one is the US dollar versus Canadian dollar currency pair. Okay, US dollar versus CAD is the chart. The trend looks bullish in USD CAD currency pair. It looks somewhat sideways over here, but the way I see it's probably going to rise up even further. Next one is the spot gold. Spot gold, the trend is up over here in weekly time frame. If you look at the daily time frame, looks somewhat bullish on a short-term basis. 4 hour time frame, this is what I've told you guys. Market is going to find the support around this buy zone area. So price did enter into this zone and then rallied back up. So the forecast did work. And now the spot gold is probably going to move sideways and then expect further upside in XAU USD pair. I will take a few minutes now for questions and comments. If you have any questions or comments related to today's Forex trading webinar, please feel free to type inside the chat box. I will be happy to answer your question. Okay, here's a question. When did you start trading? I think I started doing trading back in the year 2000. So let us review what we have learned today. We talked about the German Final Services PMI in Europe, and we also discussed about the unemployment rate in Canada. I also provided my analysis on euro dollar, AUD USD, USD CAD, and spot gold. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, June 9th, 2026, 12 p.m. UTC time. That's all from my side for now. Have a great day and goodbye.